learned to an election. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel less a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it down, we gon' get it. Working to the
All right, ladies and gentlemen, I got your watches coming in on March 20th, 2020, and there is two things that can make this stock market go crazy tomorrow. So if you've been following along with all these watch lists, we've talked about two big reasons that are coming into play. One has to do with the Fed policy and what this could do to free up liquidity. That is going to be the primary dealer credit facility that opens up tomorrow, or they're allowed to use it tomorrow. So we should see a lot of activity, and even then, we're dropping down already after hours. But then the other thing is the quad witching. So we'll talk about that, give a little explanation. I've talked about this before. You can check that out on Investopedia. But tomorrow is going to be a very interesting moment, and not only is it going to tell us a lot, it is going to have a lot of serious implications moving forward and with the stock market. So we have a lot to talk about. I have the keys for you. I have the plays, and I have a strategy that I'm going to be looking out for tomorrow and some of the other future implications that we have with everything going on. So you guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning. It's free 99. It costs you nothing to join. You could chat, ask questions, see plays made in real time so you can learn from them and just watch what's happening in the stock market in real time. It's just beautiful. So I appreciate all you guys being there. All we ask is that you're positive and respectful. And surprisingly, a lot of people are really good at doing that. So again, shout out. I love you guys. And shout out Charlie. He made me this overlay here. So I'm testing this out. Let me know what you guys think. I'm really digging it. But don't get ahead of yourself. Don't forget the most important thing you need to do. Post your watch list below. Let us know what you're looking at. You got any plays, comments, remixes? What are you looking for tomorrow? What do you have in mind? And please be careful. Nothing you see on here is a recommendation. I'm just trying to show you can lose almost financial. Please financial advisor. Personally, think everyone for that. Do not trade anything you see here on stream. I am trying to show what I am doing. That's why we even do it on stream. If I was like, hey, I just turned $500 into $40,000 like we did 2 weeks ago, you'd be like, no, you didn't. And I'll be like, no, I did. Here, I did it. It was live, real time. That's so use this and learn from it. We saw some crazy plays today. I think a lot of people got their first experience in when everything doesn't work out. So keep that in mind. Be smart and take it slow. We had a great 11 out of 11 today, and the key from that was this paper trade and go slow. A lot of you guys are new to this channel. We have a lot of old videos, but a lot of the guys you see doing very, very well, they've gone through these mistakes, but even then now they've been put on game. So everybody, if you could help somebody out, do it. But I'll try my best here to remind you guys, and I constantly am saying this, so please just remember, you don't need to force it, and you have a lot of time in paper trade, so that way when any of these opportunities come up, you're able to take full advantage of them without having to run into these errors that could cost a lot of money. But let us get right into it. As far as the keys, tomorrow is going to be the quad witching. Now, this is going to be interesting coming into tomorrow because usually the quad witching has not really been that important. However, given where we're at with the market, being at these lows and seeing it come down, it's a very interesting spot with everything going on. So our past opinion on these quad witchings might change, but I have talked about this before. I think the best resource for this is Investopedia. So we have it here. What is the quadruple witching? It's when 4 types of derivatives on the stock market, futures, stock indexes, stock options, and then single stock futures all expire simultaneously. So the key that usually happens is that it brings about a large amount of volume, and it's going to give an opportunity to flip a lot of stuff. However, it doesn't really make a lot of volatility, and this is something Investopedia says. A lot of people get this wrong, and they think it's going to cause something crazy. However, tomorrow may be an exception. So now this is going to relate to something else because there's going to be offsetting futures and option contracts that are profitable. As contracts expire, new contracts gets written. It creates different rollovers. Again, and some of you guys might see better value on some of the spreads you're holding as people are going to start to make decisions even coming into tomorrow. But after this week, we should see more contracts. That's something we talked about today. You're not really seeing that many contracts anywhere as far as out of the money on certain dates. The liquidity has really prevented it, and as far as the risk reward for a lot of market makers and dealers, they're not really willing to put that out there. So watch out for that. But then the second thing, like we said, I'm expecting a move up tomorrow because of the primary dealer credit facility. So a lot of money is going to get freed up. I would even watch the bank stocks, watch bonds, and we have that trio, the trifecta play pretty much. There's going to be plays, individual plays tomorrow, but the main thing I'm looking for even the next few months to even build positions around and play, it's going to be dollar, gold, and bonds. It sounds so boring, but surprisingly, that's where most of the excitement has been in the markets lately. So that's what I'm going to be looking for, but understanding, there's events tomorrow that is going to make tomorrow both truly unique, and it's going to, with all the volatility we have today, was the smallest move we've had in a while. You could see up here, the Dow only moved less than 1%. Every other day this week, we've been moving at least, I think, 3%. So this is a nice little change here. But, I mean, I could only imagine the volume and everything tomorrow. So it's going to be exciting. There's going to be a good opportunity to trade, and there will be a good opportunity to lose your ass if you don't know what you're doing. So, again, it could be a great time to observe. And if you've already been trading, you already know what we're talking about, you have experience with all this stuff, you are going to see a lot more opportunity in tomorrow. But now here is the kicker, even though I'm expecting a move upwards, because again, this primary dealer facility, it should allow the banks to access the repos more. This could even fix bonds tomorrow. We will see. Pretty much so. If that fails tomorrow, this is going to create another Lehman Sunday where coming over the weekend, and we might even get some, more extended release news here. But as we come into Sunday, if Friday is bad, they're going to be scrambling to find another solution because they've already thrown the kitchen sink. Again, this facility, the primary dealer credit facility, last time they used this was 08-09 during the financial crisis. This was to bail out the banks, but it's a really big bazooka. So if that doesn't work, that could signal that there might be something underneath the surface here that could get a little bit more disturbing besides all of the other stuff that we've been looking at to begin with. And this would even be the last thing I'd even leave it off on is watch the currencies, even oil. Oil had the biggest single day move upwards today, which was kind of crazy. It had a pop. There was the news that Texas may even signal stopping drilling, which is pretty unprecedented. But again, that's the era we're living in right now. But watch oil and all those currencies. But even then, watch the Chinese currency. I think this is going to be the real kicker here, especially as oil stays down in these levels. But China is approaching the danger zone. Again, China really hasn't been there. And if they start going weaker, this could be signaling stuff about some of the underlying stuff going on here. So, and even last time we talked about it, the USD JPY, this thing's kind of doing its weakening thing. It's really reflecting the dollar, and that's going to be one of the main things to even be watching out for. So keep your eye on the global currencies. Those are pop-off indicators. But again, coming into this week, if most of this stuff fails or we don't see things really stabilize or get chill kind of like they were today, and that volatility continues or tomorrow is even ugly, that is going to be really, really bad. But that's pretty much it for that. So let us get into the plays. So right off the bat, as far as tomorrow, I have a few companies I'm looking at. Again, I'm just going to be playing that trifecta, but tomorrow's going to be a good day for some of the DGen YOLOs on the dailies, but then also next week, I already picked up some of those in those McDonald's this week, but I'm going to be looking for the low IV, high stock prices with cheap contracts. That is if we see volatility as well as big price movements. Again, you will lose money. Do not trade anything on screen here. And we even talked about this. If you are, again, and especially I'll even highlight this with some of these smaller short-term plays, I'm going to go back to the $20, $50, $100 max, and that $100 is crazy, especially if it expires in a day or even next week. You got to be careful with how you balance that out. And this marketplace is a lot more advantageous to get more time and spend, even then, the smaller the better. But if I was going to spend more money, if I was going to go higher than $200-$300, and that is even on a decent sized account, I would be getting way past 2 weeks. I would set it today at least a month. That is what I would do personally. That is what I have been doing, and that is what's been allowing me to kind of stay in some of these positions and even some of the positions I set up today that we'll go over. So again, you will lose money if you trade anything on here on stream. I'm just documenting what I'm doing. So this is the opportunity tomorrow. This is just what I see as an opportunity for me and my other personalities.
Oh, yeah, let's go, Josh.
Yeah, you need to calm that little bugger down. Hold on here. So again, don't take any financial advice or anything and copy blindly from a person who talks like Elmo or any, again, just be smart, my friends. Be smart. I love you all. So that's what I'm going to be looking for. There is some plays I'm going to like. I'm still in that Guild Weekly. We were up like $2,000 on it. Then it came down today. I still want NVIDIA. I've been looking for a play on this. I really couldn't find them. They're pricing in my sweet spot with NVIDIA. I've talked about these on the weeklies before, and again, they only have 1 day, so it's less appealing, but I try to go for $60 for about $7 to $10 out the money. They're charging that for like $20 on the daily, so we'll see tomorrow, but even on the next weeks, it's not really there. So I need those plays to come down, but I still like what NVIDIA is offering, and that's what we made another play on. But another thing to look at would be also Shopify. I still have that play, and those plays were actually barely up, or I think kind of down today, so I'm going to keep my eye on them, and then we'll talk about the other plays I made today. So as far as the plays I made today, I did a lot of calls, and this is why, because as we're coming into this, as this could kind of be the next wave, and I'm expecting the upside, but I also know tomorrow is going to be a make it or break it moment with that facility. So I'm still holding a lot of the puts. I'm still keeping my cash balances, all in cash. I'm making sure on all of the accounts that I'm still going to walk away with at least double the account or double what I started with. So that is what I've been doing on all these. So then that way I'm still sitting on a lot of unrealized profit. But the idea here is to be able to maximize opportunity, but I'm also getting myself a lot of time. So I wanted to hedge it a little bit. And I'm seeing here, because I know tomorrow could be upside. And like last time, if it does kind of get some good upside, if it gets a really good upside, the calls, it gets a little harder for them to come down if they have time. So what I did, and I'm still holding these McDonald's from yesterday. You guys see we got those at 65. Those are trading at, they're up a lot. I don't know what the last trade is, but they're probably at least worth $150 or $200. They're up, I think, like 300 or 400%. So I'm holding those. Those are the next week, but that's kind of the YOLOs I'm talking about. But again, big movers, low IV. But then today I got 20 of these May 15th 355 calls, and now I talked about this because this hedges that old play I have. So I still have this old play this was the original play that blew up this account. This account started with 30 grand. We talked about it. If you guys have been watching, this thing blew up the account. I had more than one of them, and I'm still down on it. So I figured, well, I could justify get one of these plays, but I already lost 25%. So even though the market was fairly good today, I lost 25%, and that's just IV. So I'm going to use these as a place marker. I'm going to hold them, not going to average down yet. Usually I like to average down around 30 to 50% on an option. We talked about that today. So the more I'm down, I'm more likely to average down. If not, I have some time. I'm putting an amount I'm willing to lose. So in this case, I was willing to put down 1,600 because it would somewhat hedge. It's kind of like a calendar spread here because it's a little bit before the Junes, but my idea is here that it could protect me in both the short term, and I believe this still even covers earnings. But that was the first play I made today. Then I got these AMDs. I got filled at 32. I got 20 of these 60 calls. And again, the fact was we were playing this the other day, and they went up to 26. Yeah, so we're actually even down on those right now. Yeah, so down 15%, lost $100. They went up temporarily. But the thing about the AMDs is, if you guys remember last time, just last week, I had that play and I sold out of them. We got like $1,000 profit on there. But the problem with that AMD that I didn't like was that AMD was very, very strong and the puts were already expensive. So I didn't really want to do that. You could kind of see AMD is still, 100-day highs. It hasn't fell below those 2018, 2019 levels. So it's doing pretty good. Very, very strong, like bull. So I got those May 60 calls. We got them in the morning. And even as the stock went up, this is something you guys saw. As the market went up today, the fact that it only closed, so that's why these plays shot up. We got them in the morning, they shot up, and then they came down. Why would that be if the stock went up? If you overlay this wouldn't make sense. This is the implied volatility. It kind of followed it, but what started to happen, though, is that it went up in value a lot, but when the value started coming down, it spent the whole day, but then it barely moved. The stock only went up 1%, whereas the last 21 days or 20 days, stocks has moved more than 3% every day. So the fact that it's kind of slowing down and it didn't make that upside move, it lost its value quicker because that's literally the decay factor right there that you're seeing. So I got those plays, still holding those. And then we did a Sanofi. There was the talk there today, and you could see this play structure, what happened. And this will make sense. This was processing the news, and we were watching it live there. But Sanofi, they were talking about the vaccines. They had the FDA guy up there, and they were talking about what they're going to be doing. And they mentioned the foreign companies. Sanofi got brought up. So I tried to get something in there. I only got filled on one of these for 170. But again, all of these plays, since today wasn't a big day, a lot of calls and puts pretty much went down or was harder to profit. So get ready, because this market has been easier when we've saw big moves. But if the market starts slowing down, that will start killing some premium there. But as we got that news of the foreign companies, I got filled on that play. I sold out of my mRNAs. So you guys remember these. We got these a few weeks ago, and I think we bought them at like $1 something or even $2, but it was like a 60-70% profit. I sold out of this because they were talking about Guild, they were talking about Sanofi and a bunch of other products, but mRNA, they got dropped from the discussion and they weren't really talked about as much. So I sold them off. I took the profit. They ended up actually really dropping. And then now, during that same speech, they kept talking more about 3M. And this was a good play because these were in the gutter. These have a lot of time. These even cover their next earnings, which I like about it. But I got 50 of these at 18 cents. There was a wide spread, but they shot up. But again, it was the same exact issue that you saw with AMD. This was on every single stock. So there was a very weird premium factor going on. So even though we bought it right here and it went up and the contract shot up because there was both news and then it started making it, as the market started to really gas up. But the fact that the markets didn't move a lot, again, every single day, the market all the option chains are pricing in 3-4% moves and volatilities. When you don't see it, that is what's crushing the values on both sides. So again, it was very, very difficult if you look on both sides of the chain to find actually really profitable plays. So I got these 220. They're like, how did you get them? Because in the morning before the stock moved, it was very, very cheap. There's people even buying them for 14 cents before me. And then there was actually pretty decent volume on there. But now, since it shot up, this price could justify the stock moving as fast as it did. But right when it started to slow down, people are like, well, we think it's still going up, and we know that, but not 220 because the velocity of today changed everything. But I got those. I'm holding them. They cover earnings. Again, all of this is I'm taking plays that are trying to have the double whammy. They could have news and other factors, but since I'm having some of these other puts, I want to try to get some of these plays where I could get some upside. But now you're seeing the risk in that is that the volatility can crush. So if the stocks move by May and June, all my contracts that are around there, and the stocks slow down the movement and they don't move big, I will lose on both. And that is the bigger potential risk there. So always watching that cash balance and how much you're outlaying and then how much the total value is to know kind of what's on the playing field. That's important. And then finally, we had Tiffany, and this was a crazy play. So what happened with Tiffany today, and this was actually a quick flip. I did this one in 2 minutes just because of how wild it was and given the nature of the whole stock itself and what was going on there. But they got that buyout offer that they were talking about a few weeks ago, I think a few months ago with LVMH, but then it was a buyout, and I'll show you here on the chart. This is what makes this play so interesting because it got bought out. Essentially, they had an agreement to buy the stock, I believe, around like 135 or 140, but you could see the market usually trades either above or below that on a buyout, but the deal wasn't confirmed, so this was very unique. This is how you could even see a total liquidation. They even started selling off the shares. This is just the environment you're living in today. So I didn't realize that again, I was like, damn, they actually sold this off. I realized it in the moment. But what happened is that LVMH, the company that's going to buy them, they said they're going to start buying shares on the open market. So then that means they could pretty much get it at a cheaper price, and it could even lead to a hostile takeover type situation, because if they were able to acquire more shares on the open market for less than what they agreed to pay on it, and then let's say there's a breakup fee, but they would, so it's kind of like an option in a weird way, because let's say there's like a $1 billion breakup fee, but then they could save several $1 billion by just buying the shares at the open market. They're going to do that. So it could change a lot of things, but that also explains why the contracts were quick to shoot up, because the market, nobody knew what was going on. So that's what made them shoot up. That's why they were so cheap. That's why we were able to steal these. I grabbed these at 50 cents, and it happened all across the chain on every single day and this is the risk of playing news, and especially an event like this, the stock, we played it after the halt. So you guys got to really think about that and think about what the computer's thinking as well as everybody else. And this is what affects the prices, but it got halted. Now there's all this eyes on it and people are talking. So then the computer sees people are willing to buy it at certain prices now. And then you have a lot of different activity because people don't know. They're like, well, is this going to break up the deal? Are they going to get it for cheaper? Are they going to be able to acquire more than 50%? This is all throwing the prices up and down. So all of the prices went to $10. You could watch the video. It's called How I Beat the Market Makers. And it just shows the trick I use to find the options that are pretty much not moving on the chain during these events, or finding the specific ones. However, using the last trade and scanning the option chain and putting in, I set a price and I do my orders. If I get filled at it, I take it. And that's why I saw one I didn't think I would get filled. So I did 10 of them at 50 cents. Again, I'm just throwing in crazy lowball offers while these things were going crazy, and it filled me. And then instantly it was up 2,000%. So I bought those for $500. It shot up. I sold 3 of them for $370, got under $1,200. So I was able to double the investment, and I just held the rest because now I have those for free. And we talked about it. The problem with Tiffany's is that now if this doesn't lead to a deal breakup or anything like that, or depending on what the company is able to acquire, if this doesn't change the terms, then Tiffany's could go either up or down. And this would even, again, this might even open up the door for a strangle, and even on the put side. But the fact that this is like a done deal, not done deal now, this is what's going to make the option chain crazy, because to the market maker, it thinks these are dog shit, because why would you buy a put or a call when the stock is pretty much has an agreed upon price? But now that the situation has actually changed, that's a little bit different now. So some of these, but then again, now what they're going to be doing is just widening the spreads on everything. So you have to be cautious with that. So be careful. This was the play a lot of people got smoked on, and people were very surprised. And that's why you got to set a price, especially when there's news. If there's a lot of activity on a stock, you don't chase the stock price. How we've always won with this is you set a price, you set a limit, and you set it cheap. So say I'm only going to spend $50, $20, whatever. Find it on the chain. Find whichever one you feel comfortable with. Again, and this is why you paper trade, and this is not a recommendation, but instead of chasing the price of the option and trying to go up with it and just to acquire the option, set your price, put it there, and let your price come to you. If you don't get your price, you don't get your price. That's it. If you get the price like I did, you'll get lucky on that, and then you could do something with it. But don't force the trade. Don't chase it, especially when it goes up. But it was crazy today on this stock, all across the board. But that was pretty much it as far as everything else. I'm going to be looking at Guild still. Like I said, I like the AMDs, the 3Ms, and the Apples. Sanofi, too. We got those. Oh, man, this chart, I didn't know this chart was linked. So that got rid of the other companies I want to watch, but I want to be looking at McDonald's. Again, we're already in those. I'm going to be holding that play probably until next week, unless they really go really good tomorrow. HD, but the contracts are pretty expensive, so this one might be more of a daily for me. I don't know, but I do want exposure to HD. We only had that. I closed that ghetto spread one out. Starbucks is going to be another good one, especially if they move big. And some of these names had big moves already. I said I like the NVIDIA, and then Boeing as well. I think this is probably going to be the best one on Friday, especially they're kind of in the news with everything. I think that'll be a good one. And then lastly, UUP. I'm still holding that play. I really, really like that play a lot, but again, it's still, I like it only in conjunction with how I want to play everything else, because this is allowing me to play, a couple different angles, and usually if one of them loses, the other one would win, so it's kind of insured. So I like this in conjunction with the dollar, gold, and the bonds, bonds and gold. I'm still holding all of them. Remember, we got the Septembers yesterday. Those went up 100%, and then the ones we got 2 days ago, they went up 200%. Total, remember I put in 6,400, have an 8,800 gain, so I'm still holding that. That's why I like time. The dollar is a slow mover, so hopefully this will protect us. But then one thing to notice, it's like we made money on that play today, but what did we lose on? We were up 100% on this play. GLD, we're down 15% on that one. So you could see how one benefits, one loses. Those other TLTs, I'm still holding those. And you guys can see that here we have the 1 set. Remember, this is ghetto spreaded. So you see here, it says negative 14,340. That means on this trade, I cannot walk away with anything less than $14,000 because I ghetto spreaded it. So this one still has a max gain there. So I'm waiting on it, but you see I'm up on the one we shorted, and we're still up on these May ones as well too. So I have that play, but then I'm also still holding this TLT. So this one came down. It's 1,000 into 10,000. It kind of went up a little bit today, but this was that big June contract. This one was up 30,000 at one point, so I lost some definite profit there. But you see now how I have 10,000 in the bonds. I have the play on the dollar, and then we have gold. So they should be able to counteract. I am considering even hedging the UUP with some short side trades, but it's going to be kind of like TLT. When it's starting to move, we want it to really, really break out before we start to look at any of the puts or anything like that. But there's that. And then finally, the Chipotle. I like Chipotle. I said even Shopify. I like these ones for earnings. I'm still holding that play. That play ended up coming down a little bit from yesterday, but it did good. It did good yesterday. We bought it 2 days ago, but still holding that. I'm going to watch them. That's going to be a harder one to flip, but watch even the restaurant stocks with everything we got going on. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. You need to keep your helmet on. I need you in the game, baby. This is game time. Don't force it. Your time is here. If you're patient, you need to get prepared. I rebuke the FOMO. You're getting FOMO. You're applying the FOMO demon in the wrong area. If you feel like you're missing out, you got to learn all this stuff now. Take it slow. Don't get rushed and blow up your account into a situation where you're going too fast. Everyone's going to blow up account. Every single account you've seen me show has been blown up at one point. Literally. So minimize the amount of times you're going to blow it up. Go small, 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 small. Take your time so then you are prepared when the real moment, the second wave comes, you're going to take advantage of it. Let's go, baby. I need you in the game. I'm going to see you in the morning. I love you all. Shout out to Chad, baby. Let's go.